This three-step test just showed me that we are now entering a bearish trend on the S&P 500. Now, does that mean it's going to crash? Maybe. Does that mean it's going to reverse and come right back up? Also, maybe. We don't make those kind of predictions around here. All we can look at is if the trend is pointing up or if it's pointing down. And as of today, the market's trend is pointing down. It is a bearish trend. So, Joe, thanks so much for joining me today. Joe is a Ovtlyr University graduate. What you were just talking about before we went live here, what was that again? Something about outlier and the sell signal was perfectly timed or something like that?
Yeah, excellent timing on that. I got to thank the Outlier crew because we got out of the market, which means we lost less money in the downturn by getting out before the 10 EMA crossed under the 20 EMA. And that's our first sign that we're entering a bearish market here. Well, in fact, today it is a bearish market. It's already crossed.
Yeah, as of right now, it is crossed down. And in fact, what I wanted to show was stage analysis on stage 3 top because we've been talking about this for a minute, right? Stage 1 is the consolidation at the bottom. Stage 2 is the big beautiful uptrend. Stage 3 are where the moving averages start crossing back over. Where this is happening. Joe, this could be the one time. Hang on, how far back do we have to go to find the last time this happened? The last time that the 10 went under the 20 and price went under the 50 was here. Monday, February 24th. Monday, February 24th, right there was the last time that this happened. Now, after that point, it went down top to bottom about 20%. Now, again, we don't make these kind of predictions around here, but every time a big nasty move down starts, it always starts with the 10 going under the 20, price going under the 50. But that doesn't mean that it will crash down 20%. Don't get that misconstrued. So your job as a trader is to recognize when things are working right, like this big beautiful uptrend right here, and when they're not, right? When we've reached the top of the curve here, and we could potentially be coming right back down the side of the curve. Now, a lot of people look at this and they're like, nah, it's not going to happen to me. It can't go down like that. It totally could, right? I mean, we can look at several examples. SoFi bros are gonna love me as they always do. SoFi can't go down. SoFi went down 52% when the 10 went under the 20 and price went under the 50. And then the other direction, it crossed over and it went way back up. Huge gangbusters. But now SoFi has the 10 under the 20, price under the 50. It does have a bullish order block right there that could help it. But SoFi is starting a bearish trend right here. Now, it has not done this since exactly the 50% sell-off right there. So that's the last time that this happened. Let's look at another popular stock, Palantir. Definitely in a bearish trend right now. Now, Palantir, and this is what I'm saying here, right, is that it can happen, but that doesn't mean that it's going to go to zero. And this is a perfect example. It came down, farted with or flirted with the 50-day moving average many, many times, and then came right back up, right? And so your job as a trader is to recognize when it's working and also recognize when it's not. It's not today. Let's go to PayPal, right? PayPal is in a big, nasty downtrend and has been for a minute. Oh, man. Oh, man. 10 under 20, price under 50 for a long, long time, right? Let's go look at some other popular stocks. What about AMD? AMD, we've not got a bearish trend yet. Look at that. Your 10 is still over the 20, price is still over the 50. So AMD actually still has a bullish trend going on. But as we know, AMD absolutely can go down. I think a lot of people, and this is not the first time it's happened. I think this happens over and over and over, at least since COVID, is that people get so used to winning. You're going to get so used to winning that you get tired of winning, Joe. They get so used to these big, beautiful uptrends that they forget what risk is like. And then, like in early 2025, when it went down 20 something percent, they get caught on the wrong foot because they didn't even know that stocks can go down. Or in 2022, let's go to that chart right here. They didn't even know stocks could go down for more than an entire year, December of 2021 over to January 2024. That's how long it took to get to a new high on the market. Over 2 entire calendar years right there. You don't have to participate in that. You can be in when it's going up and out of the way when it's going down, and then you can compound the growth. Joe, what were you saying earlier about, what did you say, the SPY compounded growth? I don't remember what you said. What did you say?
I was having a look at Plan ETF, and if you just took the outlier buy signals on SPY while the trend was up, so 10 was over 20, price was over 50, you would have seen about 150, 149 compound annual growth rate since November 7th, 2023. Just those two signals.
Really?
Yeah, yeah, that's what the math comes out to be.
That is not normal.
Yeah.
That's not even close to normal. That's like unbelievably abnormal.
Yeah. Yeah, Charlotte says she's never seen a bearish market. What does it mean? Well, it just
Ooh.
means we will sit in cash until our signals line back up. Could be, let's see, the last time it happened was about 3 months. The time before was about a month and a half. You just wait until your signals line back up.
I think that's a brilliant question for sure. Like I've never known a bear market, right? And so that goes to what I was saying just a couple minutes ago, right? So many people get into the market thinking it can only go up. And then when it doesn't, what do? Well, to Joe's point, right? The first thing to do is sit in cash and don't F up your portfolio, right? That's the first step. The first step is that, okay? You don't have to participate in the down moves. I know that sounds crazy, but when the market is trending down, you don't have to be part of it at all. But once it trends up, you can be in. Now, I want to show you this too, right? I've been talking a lot about how every time it trends up doesn't necessarily mean it's going to go up for months, right? You can see right here many times where it popped up and then popped right back down. And it went down and down and down and down and down. It popped up. That was a bullish trend. And then it went down and down and down, right? You can have shorter term bullish trends inside of a longer term bear market. And you can have short term bearish trends inside of a longer term bull market. So, what I'm trying to get across here is that you don't know the future. I don't know the future. Joe doesn't know the future. Even Outlier, which is only 82 cents a day, can't predict the future. But it does tell you when everything is moving in the direction that you want to see. Now, looking at this right here, we're starting a bearish trend inside of a bull market. What we need to see to go from a correction to a bear market is a 10% pullback from all-time highs, get you to a correction. So let's find where that 10% point is. 10% down is to about right at that order block, interestingly enough. So that would be a correction. 20% down will get you down to pretty much that order block down there, a little bit past it right there to around 550, right? So these are the levels that you need to get to see a 10% correction and a 20% bear market. Now, the funny part about this, Joe, is just a couple weeks ago, Jamie Dimon and who's the guy from Goldman Sachs? David Solomon, I think his name. David Solomon. Either way, the head honcho at Goldman Sachs, the head honcho at JP Morgan, all the bigwigs, right? They came out and they're like, don't be surprised to see a 15 to 20% pullback. And Joe, this is not uncommon, right? What's uncommon is stocks to only go up. It's way more common to see volatility and to see stocks pull back and go down and even see stocks come back down, like, you know, it can go up 8% and down 5%, up 10% and down 15% kind of thing, right? It actually can happen. There are two sides of a market. However, people get really jaded and think, oh, the market only goes up. It only goes up from here, Joe. What is this risk management you speak of? I only talk in Lambos.
Mm-hmm. Yeah, well, we've been in a bull market so long. You're exactly right. People forget.
Yeah, JPP, great story here. I lost my backside on the 2022 bear market. Better off in cash these days, right? And to JPP's point, right? That 2022 bear market right here, right? That wasn't like world-ending movements. That was just a bearish trend playing out with smaller bull trends up in the meantime, right? And then it eventually came back and started to go back up. And that's the thing, is that, like, I don't know his situation, and I'm not trying to speak for him, but when you see the 10 over the 20, price over the 50 right here, that is a bullish trend. And it can last for a long, long, long time. And our job is to let it run as far as it can. Then there are times where the 10 goes over the 20 and price goes over the 50 and it pops up and pops right back down. You might make a buck or lose a buck. But when it does work, you got to let that dude run as long as it can. Now, I want to reiterate the point here is that it doesn't matter. Hang on. I get to do it, Joe. It doesn't matter. Hold tight. Hold tight. I got to share my screen with sound. Share screen, entire screen with sound. Here we go.
Is that what you think? That's exactly. It doesn't matter what you think.
It doesn't matter what you think it's going to do. It only matters is if it's trending up and you're following that trend, right? It can be that simple. Now, with Outlier, thankfully, it does tell you the buy and sell signals. But right now, right, the market breadth is falling. I mean, it's in a bullish posture right now, but it's falling. We're getting less uptrends, more downtrends. So that's not going to help us. And looking at over here, we have 34 new buy signals today, 61 new sell signals. The market is showing sell and sell and sell again. So for me, this tells me that I will be sitting in cash and not effing up my portfolio. And we just looked at several. Down we go. Exciting to make Masters of Universe money on the way up. No, you're doing it wrong. Boring. Boring to make Masters of the Universe money on the way up. Don't be excited about it. If in fact, in the Outlier U song, it says, if it's exciting, you're doing it wrong. And I mean that. It sounds crazy, but I mean that.
Well, for one, I have to agree with Sonny, because in my past, I would have just written it down. But now I know. Now I am in line with Vincent, financially literate. I understand that you do not have to chase it all the way down. You don't even care what the floor is. Just chase it on the way back up.
Exactly. And I showed this in this morning's video, but we'll show it again. I know not everybody watches everything that I put out. I mean, I don't know why you wouldn't. I only put out 11 videos a week. Don't you have time to watch 11 videos a week? If I have time to make 11 videos a week, by God, you better have time to watch them. But looking at the COVID crash, that's what I want to look at. The COVID crash, right? It was as obvious as possible which direction things were going. And remember, the 10 EMA, 20 EMA, 50 period EMA on all time frames, on weekly, monthly, daily, 1 minute, 10 minute, 15 minute, doesn't matter. It always works. It always works, because it shows you the direction of the trend. So here, the 10 was under the 20, price was under the 50 on February 24th. I can guarantee you there were people screaming, buy the dip, buy the dip, buy the dip, as the market's down just 3%. Listen, Joe, the market always goes up. Man, this is the same stuff that I've heard for years. The market always goes up. So take this opportunity right now with this small pullback to buy more, because when it goes up, you're going to be making so much money. But imagine you took that advice and you bought it on that candle. And Clicky, come on, Clicky, you got this. There we go. You bought it on that candle and you're watching it just evaporate day after day, week after week. And you're like, oh my gosh, this is bad. Oh no, the whole world is getting sick. The market's down 35%. My YouTube gurus are telling me that I have to buy the dip all the way down. Oh geez, this is crazy. And if I miss the 10 best days in the market, then I've missed everything. I've missed all the gains for the year. Let's keep in mind that this 8% up move on that day came after a 26% down move. Listen, you could totally have skipped that 8% down move. I'm sorry, that 8% up move, and been just fine. The biggest up moves sound crazy, but the biggest one-day up moves nearly always come as it's in a bear market. Now, to this point over here, you got out when the 10 went under the 20, price went under the 50. And then you got back in right here because you are a smart outlier. You understand the trend template. You got in over here. Did you catch the bottom? No. Did you catch the top? No. But here, I'm gonna draw on the chart right here. But you caught the 80% in the middle right here, right? You didn't catch the bottom, you didn't catch the top, and you didn't have to. Because this person right here who thought they were going to buy the dip, they were a genius, right? They just got back to break even in June. And if you really want to put it out there, it started to really cross back over in July. But they got back from February to June. So 4 months it took them on the biggest recovery ever of all time. You, however, were already up 15% when this person was just getting back to break even. When you follow the trend template, this shows you the direction of where it's going. You don't buy the dip because you don't know how far or how long the dip will occur. And once it finds a bottom, the trend template will align bullishly, just like it aligned bearishly on the other side. And in this particular case, and it won't always be this, you would be up 15% when this person just got back to break even. And you basically were at profitability right away, where this person lost all the remaining hair that they had left on their head. And if they had 40% hair on their head, they didn't have a whole lot to start with to lose, Joe. Plumber Fred says, I've got friends writing all the way down. They think he's crazy for joining Outlier.
But then they're going to be coming back and asking him, how'd you do it?
That's a great point.
He'll get
That's
a
a really
referral.
good point.
He'll get a referral bonus from Mahesh when he brings him into Outlier, though.
That's right. Niles has a great point here, right? We have not got to trade Plan M or Plan A yet. And I'm so disappointed by that. But you know what? The market has not set up for that. And that's part of being in a plan is A, you don't have to hope and pray that it works for you because you already have all the details you need for the plans, right? And not every plan is going to win. Well, I should say not any plan is going to win every time. But when your trades look like this, where you have lots of break evens or small losses or small wins, you have no big losers and only big winners out here. That's a winning strategy right there. That's plan ETF right there. That's what makes your equity curve look like this. And Joe, it sounds crazy, but there are times, even in plan ETF with 1140% backtested returns, where it actually went down and then went up, right? I like to think of it as taking one step back to go 100 steps forward. That's what it's like when you have a plan, when you understand the power of putting everything in your favor, right? Plan M and A, that is when it's time to be aggressive in the market. Plan ETF and sit in cash, or when it's time to be defensive. And you know what? There are times to get in and times to get out. So let's go through these plans real quick, right? So welcome to the Outlier Trading Room, invitation only live stream. This is where we help you save time, make money, and start winning with less risk. And go ahead and subscribe if you haven't already and you're watching the replay. Plans M, A, ETF, and sit in cash, what we're going to go over real quick. And if you want normal returns, go ahead and hold it all the way down. Hold it all the way down, Joe. But if you want outlier returns, you're in the right place. So on these two over here, we've been out of the market for a minute because the SPY being inside of a bullish trend is true. However, the SPY buy signal has flipped to a sell. The SPY fear and greed heat map is under 70 and falling. Let's go to that real quick. Under 70 and falling. So it's getting more fearful, less greedy. And then the breadth is crossed over, but you don't find one thing on its own. You need all the market signals moving in your favor. So for me, my friend, I don't see any reason to trade. Now, did somebody say Outlier University? Well, by God, I don't think anybody said it, but I'm going to click the button anyway.
Are you ready? Let's go! Respect is earned. Respect is never given.
That's Ozzy Ian asked the question. That's what it was. Do we have any classes where we could learn all of this? Well, in fact, Outlier University is live again tomorrow, every Tuesday and Thursday, except for Thanksgiving and Christmas time, because we won't meet next week. We'll be on feast mode. We'll be on feast mode next week. The Outlier University, I'm going to teach you everything that I know. In 16 years of trading, I'm going to teach you literally every single thing that I know. There is no paywall other than being an outlier, which is only 82 cents a day, and you can watch it live, and then it will be for free on YouTube forever. There is no masterclass where I'm going to teach you some bullcrap for an hour and then pitch you a $12,000 course. Everything is included. I'm not holding anything back because I want you to be successful. And Joe, right here, he has found tremendous success as being an Outlier University graduate. Don't take it from me. Take it from Joe.
Yeah, that's right. Yeah, I went through the entire program 2 times a week with my fellow classmates who I have made lifelong relationships with. We've all been successful. We've all had our own plans to follow after that, though. You know, we each took the example that was provided to us and we altered it to the point where it was right for our emotional ability to trade as well as our lifestyle. So you get, you know, the foundation, you get the tools. It's really up to you to run with them and to make use of them. And we all did.
That's right. And that's the great thing about this is right. In Outlier, we try and teach you the way to be successful. we're not going to just say you have to do this no matter what, follow this plan and you'll be successful. It's I'm going to give you the timeless principles. I'm going to give you my trading plan, and you take and choose what you need from it to work with your lifestyle. In fact, that's what I did when I worked with 5 market wizards. Each one of them traded differently, and all of their different ways of trading, I took what I wanted from each one of them, and I've made $4 in the market. I like to say it that way, Joe. I've made $4 in the market so far, and you can make $4 too.
That's right. We had an Outlier University graduate that rolled gold multiple times, made huge money on it. And I don't know if he would have seen those signals before taking the university classes, but it certainly didn't hurt him.
Yeah, for sure. So listen, um, Captain Hindsight, aka Skinny Buff Guy, aka William, who's one of the students in class, says, "Isn't it weird how if you lost 10% of your account trading, you'd be called a risk taker? But if you hold long term through a 30% drawdown and dollar cost average all the way down, you'd be considered perfectly normal." That is super weird, Joe. Why do people do that, right? You're a risk taker, but I'm not a risk taker. I'm gonna hold this shit I'm going down with the boat, dude.
That's right. I believe.
Yeah.
Uh,
That's
we are
I think
not
that's a
normal.
really good point. I appreciate the that point there. It really is all about the it is all about the fact that you get to choose when you do participate in the market, right? Nobody is making you buy anything. And what you can do is sit in cash, like we talk about here, in SGov, which has a 4 point whatever percent APY, and you can earn money as the market's going down, and you don't have to do anything. You just sit there and collect it. It is awesome, honestly, the one of the easiest things ever. And it's why that is why it is one of the core 4 parts of our trading plan, right? Be aggressive when the market's handing it to you and it's in a stage 2 uptrend. Be defensive when things are not looking just right. And of course, sit in cash so you don't F up your portfolio. All right, Joe, that's going to wrap it for me today. Thanks so much for hanging out with us. If somebody were looking to save time, make money, and start winning with less risk, what do you think they should do?
Well, first they should become subscribers of Outlier for 82 cents a day.
Oh, what a
And
deal.
yeah, super good deal. And then they could look through the videos on YouTube that have all the receipts from all the trades that prove that it's not trust me bros time. And they could start with those videos right here.
That's right. Click one of these 2 videos. Have a fantastic day, and we'll talk soon.